Okay, welcome to tonight's special board meeting, Monday, September the 12th, 2022. At this time, if you'll please rise for a moment of silence, and we'll say the Pledge of Allegiance.
Okay, Pam.
Okay, the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Again, welcome to tonight's meeting. The school board members in attendance tonight are Ms. Williamson, Mr. Carroll, Ms. Gibson, Ms. Bell, and myself, Bart Alford. Ms. Bishop is recording our minutes for tonight's special meeting. Ms. Joseph is absent, so we will continue. At this time, we're presenting the superintendent's annual financial report. Ms. Rayneck.
Good evening.
Good evening.
Good evening.
I'm pretty sure that most of you know Mr. Vincent, Mr. Michael Vincent. He's the certified public accountant who works with us to make sure that everything is good in these financial reports. And I'm going to let him go over, there's 3 different reports. He's going to give you some overview of the reports, and then there's also another thing on the agenda we'll get to later. Okay?
I didn't know that was telling you everything was good on the report. It's not bad. All right, well, it's a shame we only get together to do this because there are more fun things to do. I do have a magnifying glass this year. Last time I had trouble reading some of the numbers. Thank you, Ms. Rose. So the first report to look at would be the ESC 348, Report of Financial Data to the Commissioner. It's looks like this. It's actually the 8.5 by 14 with the table of contents on it. This will be the one that we'll look into a little more than the others. Because a lot of it's redundant, but basically, as we've discussed in the past.
I see the number on the
145.
Oh, yes. The 348 is what I'm looking at.
Oh, 348.
So, as we've discussed in the past, you have 2 different measurement focuses here that we use when we compile these financial statements. The one we're mostly concerned with is the current financial resources focus. That's what a fund accounting is all about, and that's what this here is going to show us, a detailed list of revenues, expenditures, and changes in fund balance that have occurred in the funds throughout the year. The other report we look at is a little more aggregated, and it shows another focus that we'll talk about in a moment. So on page 1, and I'll have to give you a minute to find page numbers because I do not design this report. This is how it comes. I think it's been this way for 30 years. You're going to see a detailed list of the revenues in the general fund for the fiscal year 21-22. At the top, you'll have a breakdown between federal, state, and local. Your federal revenues for the general fund, the federal direct, and then you have like your Medicaid funds, which is your reimbursement from the ACA for Medicaid for your fee for service, for your administrative claiming and things of that nature, services you provide that are reimbursable. And I think Ms. Sandy works on that here for the district, make sure we get those funds. Then you have the FEFP, which that's the primary source of revenue for the district, and that's driven by the FTE. Workforce development, that is pretty much a standard allocation that stays the same every year. It's restricted for how it can be spent. It can only be spent on adult general education and cannot be spent on K through 12. Let's see. Going down to the categorical section, you see the class size reduction to about 2.2 million. Both the FEFP and the class size have gone down a pretty good amount in the past couple of years for everyone because of the scholarship share that you've seen. Maybe in this district not as much because of the the prevalence of the charter schools already kind of, they have some of that FTE already, so you don't see as much of a loss. But in other districts, or Hamilton, for example, when we got the first amount of the share that we had to share from our FEFP with scholarships, it was quite impactful. So doesn't show any signs of really slowing down either. Okay, so that's your state revenue, and primarily that was comes from the state, from DOE, FEFP, class size. Then you got your local, that's your operating taxes, that's your required local effort, and your .748, your discretionary operating that you levy every year. That's what generates those funds. And then all the way down at the bottom, I'm just hitting some of the highlights here. You'll see the federal indirect costs. That's the amount that you collect, the percentage of federal expenditures. Each grant has a different amount, but may have a cap for the most that you can collect, or you'll have a standard approved cost rate that you can use each year to apply to those grants. You'll see that number to be higher this year because of all the ESSER funds that you have. You're able to collect indirect costs on them. You'll also notice there are no food service indirect costs this year. It was determined that with the fund balance in the food service fund that it was probably not sufficient it definitely was not sufficient to provide for indirect costs for this year. We can see that in a moment. I promise that's the longest time I'll spend on any page. Next page is your expenditure breakdown for the general fund. It basically shows you by function or by purpose, and then it breaks that down into the good or services being provided or your object class. So the largest item is always instruction, and it's always salaries and employee benefits. Those are the largest percentage of expenditures in any school district, of course.
Let me ask you a question,
Yes,
if we
ma'am.
could, right here. Okay, instruction, employees, what is the percentage of employee, or maybe this isn't the right place to ask the question, but I'll ask it, I guess, now that I started.
Sure, go ahead.
What is the percentage spent on our employees?
For salaries,
Yes.
I calculate this in Hamilton. I don't know exactly what the number is. Rose could probably pull up. Do you know?
The general fund is 51%.
So 51 out of the general fund,
It's
okay.
got, if you include benefits, it's more than that.
Oh, yes, more
Yeah.
than that. That's just the broad is running from. So it's closer to the 79%.
For-
We figured it, I think Miss Mary and I figured that, I think I shared that with you.
Okay, 79% for the
It's
total.
about 79%.
Okay,
It's the total instruction with benefits cost.
okay.
Now, in the purchase services for instruction, the 300, or the 300 objects, I see that that's just a large amount in the general fund. I'm not sure. Some things that you may contract out versus having the actual employee, such as your substitute services and things, would show up in that column. Okay, unless you have any questions about that page. Next, we'll just kind of see the wrap up for the general fund. These are other financing sources and uses. So your loss recoveries, things that were damaged, insurance funds is what this is for. I don't know what it's for specifically, but the biggest part is going to be your transfers in. There's certain expenditures that are allowable by law, which you guys would know whenever you approve the trim budget and you see the capital outlay advertisement. You can reimburse the cost of certain maintenance, salaries, and benefits from the general fund. From your local capital improvement fund, you can reimburse the general fund for those expenditures. Also, certain insurance premiums. So it's helpful to be able to transfer that money to the general fund each year. So that gets added in as a other financing source. And then at the bottom, this is what everybody wants to know. Here's the breakdown as of June 30th, 2022, what the district's fund balance and the makeup of it is. Restricted funds, about $265,000. Most of that is your categorical things or your general fund, your FEFP allocations, such as maybe mental health, reading allocation, things like that. Then you have your assigned and unassigned fund balance, which is together make up your unrestricted fund balance. That's the ratio of those divided by your total general fund revenues. Is that how you determine the financial condition ratio? By state law, you're required to be at 3%. I know you guys who've been on the board for a while remember the issues that we've had in the past. Currently, that number is closer to like 17%. So now a lot of that, and I don't want to step over the boundaries here, but a lot of that has to do with the use of ESSER funding to help kind of, buffer the general fund in this time when it's very important, because when those funds go away, some of the FTE loss that you've had will be more real and right in front of you. So it's good to have that. It's good to have that buffer, or probably reserve is a better word than the buffer. The some of that reserve also was put aside for your $15 an hour. Any potential further decreases in FTE with a scholarship share, potential recessions. I mean, you want to have funds set aside for that specific purpose. And that when you see, just so you know, assigned fund balance, by approval of the AFR, that is the board authorizing the superintendent to assign those funds. If you went up to the next level, you see there's nothing under the committed fund balance. That section would be if the board themselves passed the resolution to set aside funds for a specific purpose. So, and then restricted fund balance would be restricted by a third party. So that's what those different, and then non-spendable would be something like inventory. It's not in a liquid form to be spent. So that's what the breakdown of those mean. Any questions about your general fund? Okay, I'm gonna pick up the pace now, so we won't hear all night. But if you have any questions, just stop me. Next is your food service. Most of the food service fund is your federal revenues, reimbursement. You guys have been on CEP, so you get, I think all your 100% free and reduced or free district. So your students don't have to pay for meals. So you get the National School Lunch and Breakfast Program reimbursements. That's a significant part of that fund's revenue. And then also charges for additional lunches and things of that nature on the bottom of the page. So your total revenues were about 1.4 million. You can see on the next page that the expenditures in this year were greater than, or excuse me, ran a deficit basically in the food service fund. Now part of that has to do with the expenditure of funds that are grant related, that the grant has not been, the grant reimbursement has not been received yet, and because of the timing of it, the revenue couldn't be recorded this year. So there's about $86,000 in revenue that was unable to be put on here that will be realized this year that will make up for that. So either way, if you look at the bottom, $175,000 of the fund balance is non-spendable or inventory, and then $22,000 is restricted. So that $22,000 is pretty much what you'd have available to pay indirect costs to the general fund for, and we didn't feel that would be appropriate to try to take that at this time. Okay, then you're going to have quite a few pages of federal information, your special revenue, federal other, which is your pass-through grants from DOE, and then your ESSER funds. It does break down with the revenue, kind of tells you what type of grants that you received. IDEA, $743,000, your Title I related grants, close to 1.6 million. Those are the bulk of that fund, and those are the ones that you guys are going to see every year pretty much. Those are the entitlement grants that you get on an annual basis. Then you have a breakdown of expenditures by function. All your federal funds always have a zero fund balance. They're 100% reimbursement or cash advance basis. You spend the money and then you request reimbursement. At the end of the year, revenues and expenditures always match. Then you get into ESSER funds. You can see there are currently 6 different funds. And keep in mind, I always tell everybody, take it a little easy on your finance department and some of your federal programs departments, because we're not used to dealing with this number of grants and the amount of funds. It's a lot to keep up with. It's every district that I've been involved in has seen the workload increase dramatically. So it's a good thing for the districts to have, but it causes a lot of extra work as well. So there was a little over $6 million spent from ESSER this year, and I know a lot of that was spent on capital improvements, your HVAC systems and stuff that needed to be upgraded. that was one of the allowable things for ESSER funds to be used on. So it's a good opportunity, and it saved money, saved you from having to borrow money, it saved money in your local capital improvement fund as well. So there's, let's see, we will just talk about it here and then we'll cut it out of the next. Time for the magnifying glass. Goodness gracious. So on page 16, after you go to page 16, exhibit K6. I need that number. It looks like this. You can hardly see it. You have one debt service fund, and I'll just tell you the numbers that are there. This is the fund that you use to account for the debt service, your resources that you use to satisfy the quality school construction bonds, I think is what you have, that were issued 2009-10, are related, that were used to renovate the high school. So you had two issues there. One of them was paid over time, the other one was interest only, and now you've begun to pay off and satisfy that remaining issue. I think it's called 2010B is the issue. This fund is just where the resources to make those debt service payments is maintained. And your sales tax distributions of about $217,000 are going into this fund every year to pay that debt service, and some of them are being accumulated so you can continue to make the payments for the next 4 or 5 years. That $217,000 are funds that are normally in your general fund. So that's something that down the road you will get back to the general fund once these obligations are satisfied. Now you also get an IRS rebate every year. You get a rebate from the IRS each time you make an interest payment for the tax, and it's about $30,000 each, so about $60,000. So you get the $217 from your sales tax distribution and about another $60 to pay towards that debt service every year. There is a schedule. We'll get to that in a moment, but show you the payments that are left to be made and what year they'll be satisfied. And then the next thing is page 17 and 18 is your capital projects funds. The biggest one being your local capital improvement fund. So tiny. Your district local capital improvement tax collections this year were about $1,273,000. Of that, $490,000 or so was spent on your maintenance, repairs, and equipment and things like that at the district. I think some of it was also spent on HVAC. And then remember, we talked about earlier, you transferred some funds to the general fund to reimburse for maintenance salaries and for the insurance premium, so that came out of here. And so when you combine that with your beginning balance, you have about $1.3 million carried forward from last year in capital outlay dollars. Other items I'll just mention, you have about $620,000 in capital outlay and debt service. That's in the fund right next to it, 360. Those funds are also available for capital outlay. You receive, I'm trying to remember what this district receives, 60 or 70 grand. I don't remember exactly each year from the state for those dollars. I think primarily they want them spent on your major focuses. They have to be approved in a survey, with your fish survey, which you do with the Florida Inventory Schoolhouses. Every 5 years you have a survey. Those funds have to be spent on things identified in that survey as issues the district needs to address. And so that is the bulk of this report. The most important parts that you'll care about. If you are interested, the very last page, I just lied. Okay. It looks like this somewhere in the middle. Should be the very last page, but right now it's before all of these pages.
What page number is it?
Page 32 is what it says, but it's actually,
Is that there?
I tell you what, it's right after page 29.
After page, oh.
And it will be vertical like this. I apologize for that. It's supposed to be the very last page in the document. It's before that. Keep going. Yes, ma'am.
Because there's a lot of page 30s.
Yeah, there's a lot of page 30s, yes. Well, and basically, this is just the schedule of expenditures of federal awards. So it will show you by grant, by CFDA number, exactly how much you received and what the pass-through grantor was, all that information. You would be able to tie those total amounts to your special revenue funds. So your 410, usually 420 pass-through, and all of your ESSER funds. Those total revenues there would total to, or expenditures, excuse me, would match to the revenues you recorded in those special revenue funds. So if you want to approve that one separately, that would probably be ideal.
Okay, are there any questions concerning the 2021-2022 annual financial report package? If there's none, is there a motion to accept the annual financial report package for 2021 through 2022?
I move to accept the financial report for 2021 to 2022.
Okay, it's been properly moved by Mr. Carroll to accept the 2021 through 2022 annual financial report package. Is there a second?
Second.
Second by Ms. Gibson. Any discussion? All those in favor, show of hand, please. 5-0, Ms. Bishop, for approval of the 2021-2022 annual financial report package.
Okay, we were going to do the one that says Superintendent's Annual Report, the 8.5 by 11, ESC 145. The other report, when we started out, I mentioned, did you see that one? Okay. We mentioned it's what they call the current financial resources measurement focus. It's interested solely in your receipts, revenues in that fiscal year versus expenditures that happen in that same fiscal year. A Government Accounting Standard Board's pronouncement came out years ago that said they wanted, instead of just using fund accounting, which is the most useful for our purposes, they wanted us to have a financial statement that was relative or comparable to what a public company might put out. So the long-term assets and any long-term liabilities needed to be implemented into the financials and create what they call a statement of net position instead of the balance sheet, and a statement of activities instead of a statement of revenues and expenditures and changes in fund balance. So at the very beginning of this report, you will see the results of that conversion on it's Exhibit B1, page 2, right after the management discussion and analysis. So this is called the balance sheet equivalent. We call it the statement of net position. And basically what this has done is it has implemented your capital assets and your long-term liabilities into created this financial statement that would be something that you could compare. You still are going to only compare with other districts and other governments of similar size, but it does kind of give you the complete picture. So in theory, if you were to liquidate all the assets of the school district, pay off all your debts, and go home, this would be the amount of funds that were left over. That's the idea here. Your governmental activities, $5.4 million in cash. That is your bank cash account in addition to your SBA prime. They're considered, although that's kind of an investment, they're considered cash equivalents for the purpose of this statement. Due from other agencies, which is primarily unreceived federal reimbursements at the end of the fiscal year. So remember, we said the revenues have to match expenditures. If you've got a lot of expenditures on June 30th, but you haven't received all the revenue yet, you have to record the revenue and recognize that you're waiting on that money to get here. That's what that number represents. And then inventory, then you've got your capital assets net of any depreciation. And so now you get a total assets for the district of $49,243,000. Then we're going to get into some items that are deferred outflows of resources are in theory basically assets. They just have a little bit different definition about them because of timing. But all of this is related to the long-term liabilities that we're required to report related to other post-employment benefits and pension liabilities. It's a lot of stuff that I'll mention. I'll talk about it in a minute. So your assets plus your deferred outflows of resources, then you're going to take out any liabilities you have, as well as any deferred inflows of resources on the next page, and that's going to give you your net position. So your net position, according to the statement of net position, you have about $41.6 million in net investment in capital assets. In other words, your capital assets, your value net of depreciation, and then minus any debt that's related to your capital assets. So those quality school construction bond, that total debt that you have, which is about $990,000, that number comes off of your net capital assets to give you your net investment in capital assets. The restricted for section, most of that comes directly from your fund balance numbers that we looked at earlier. It's your categorical carryover. Those are your allocations from FEFP that have been restricted. Food service is going to be your food service balance. Debt service, capital projects is going to be your capital project fund balances. And then you get down to this number unrestricted. Now about 4 or 5, I guess it's been about 6 years ago, that number made sense. It was a positive number, and it usually pretty closely matched to what your unrestricted funds were in your fund statements. Well, the powers that be determined, I know I mentioned this before, but determined a while back to, even though we share the board contribution, every contribution the board makes towards retirement, it goes to the state. At that point, that obligation is no longer the school district's. However, because there is a net liability related to that, a few years ago, the Government Accounting Standard Board determined that we should share a part of that liability, even though we don't actually have that liability. So they give us a bunch of information to input. This is probably TMI, but it's in the report. They give us a bunch of information and they tell us, okay, if you had to pay, it was your responsibility to pay for these pensions, this would be the amount that you're short. However, it is not your responsibility to pay for these pensions. They just want us to carry a portion of that net liability. So that's why that number shows negative $9 million. If you can skip back to page 18.24, way in the back. That changes in long-term liabilities. That schedule shows you what makes up most of that information that you see as a negative number on the front. This is the long-term liabilities of the district. Your bonds payable, we've already discussed. Compensated absence is payable, which means if everyone were to just quit right now, this is what you would be required to pay out for sick leave, vacation leave. Your net pension liability and your other post-employment benefits liability, that's the bulk of it. So because those amounts don't have a trust associated with them by the district set aside to fund those plans, we share the full portion of our liability based on what the state tells us. So in effect, you get a giant negative number on the financials. Although again, that's not your liability. Is this on camera? Okay. Erase that. And then you have, I'm sorry, I went back to the statement of net position, and then right after the statement of net position, you have the statement of activities. This is the equivalent of the statement of revenues, expenditures, and changes in fund balance that we looked at earlier. This is the government-wide, so it's taking certain costs that may come out in the year, like if you receive proceeds of a loan within the year, in your fund statements, you're going to record all those proceeds. And if then you turn around and you bought buses, you're going to record all those buses in the expenditure. In your government-wide statements, you're going to record that money that you received in proceeds is going to end up getting put as a loan, and the money you spent on a bus is going to end up getting put in capital assets. So there's different information on the statement of activities than there are on the balance sheet. If you're really interested, you go a few pages further to Exhibit C2, page 5. That will show you the actual conversion from your governmental funds to your statement of net position and everything that's entailed in that. And then a couple more pages to Exhibit C4, page 7. And that will show you the conversion from your fund balances, your total fund balance, to your changes in net position. Sorry, your net change in fund balances to your net change in your net position. If you find this topic interesting at all, you go to the notes on page 18.3, and they have a section called Measurement, Focus, and Basis of Accounting. There is some good information in the notes that kind of shows what's going on here. I'm not going to talk about it any further unless you have any questions, but the notes do provide a good amount of information on what makes up both your government-wide statements and your fund statements. How you collect some revenues, what constitutes your capital assets, how much you spend on depreciation, what the breakdown was. A lot of that stuff will be found back here. You can answer any questions that you have. So, unless there are any questions, if I missed anything important to talk about. This is the report that is audited by the Auditor General. This is what, when the Auditor General comes on every year and they're doing a financial and federal audit, this is what they're auditing. The numbers that make up this audit report, the numbers that are in the note disclosures that are in there, do we have adequate amounts of notes? And then, of course, they're looking behind those numbers as well to make sure what's in here is complete and accurate. Whereas what we approved earlier is a DOE-specific document where they're wanting that information broken down the way it is. And if you wanted to look in the back of that other document, right after those statements we were looking at, there's a lot of other sub-object breakdowns and expenditures in there as well. But that's a DOE-specific. This is the annual financial report, is where we're required by the single audit action report on the SEPA and be subjected to a federal audit annually because of the federal grants that we receive.
Okay, are there any questions? Mr. Benson, what would we call this when we make our motion?
Oh, you could just call it the annual financial report ESC 145.
Okay. Okay, is there a motion to approve the annual financial report ESC 145?
I move to approve the annual financial report, ESC 145.
Okay, it's been properly moved by Ms. Gibson. Is there a second?
Second.
second by Ms. Williamson. Is there any discussion? Okay, if there's no discussion, all those in favor of approval of the annual financial report, ESC 145, please show a hand. 5-0, Ms. Bishop, for approval of the annual financial report, ESC 145.
You look thrilled, Ms. Bell. Okay, the final report here is this is another DOE specific report. This is the district summary budget, not affectionately known as the ESC 139. I'm not going to get into detail in this budget. It's structured the same way as the 348. You're looking at revenues and expenditures. The total numbers that are on here are going to match the numbers on the trim budget that you have already approved. This just kind of shows you the more detail behind that. I will say that the numbers that are in here were based on, especially in the general fund, were based on appropriations, which were back in March or April of last year. Once the second calculation came out in July, the numbers have changed. In addition, scholarship information has changed if you're counting that, but expenditures that happen, we're constantly revising the budget throughout the year, so there's already been budget revisions that have happened to change some of these numbers. So this is the original budget as established by the board and approved with trim, but this is just a more detailed version of it. So if there are no questions, then
Are there any questions concerning the district summary budget, ESC 139? Any questions? No questions? If there are no questions, is there a motion to approve the 2022-2023 district summary budget, ESC 139?
Make the motion to approve the district summary budget, 139, ESC 139.
Okay, it's been properly moved by Ms. Williamson. Is there a second?
Second.
Second by Ms. Bell. Is there any further discussion? It's been properly moved by Ms. Williamson, seconded by Ms. Bell. All those in favor of the approval of the district summary budget, ESC 139, show of hand, please. 5-0, Ms. Bishop, for approval of the district summary budget, ESC 139.
well, thank you very much. And if you're all thinking, why can't they come up with something besides ESC, I would agree with you. Should be able to give that a different name so we wouldn't get confused.
Right.
And thank
Thank
you.
you for your work.
Thank you.
Okay, the next item we will be looking at tonight is the adoption of the interim 2022-2023 salary schedule. Ms. Rayno?
Thank you. You've had a lot of information tonight, and you've had three big major documents. One, what DOE wants us to say happened all during the year. One, what the auditors want us to say happened during the year. And then another one that kind of summarizes your trim budget. So you've had a lot of that background, but in addition to that, we have to put together a packet to go to the Department of Education that includes a whole lot of other things, including these three reports you approved. One of the things that we have to do is we have to adopt the salary schedule for the year. Because we have made some changes already, you've already adopted the administrative salary schedule, and you've already approved that we would start paying the $15 an hour for all of the non-instructional as effective July the 1st. We have taken that information and put it into this budget. Those are the only changes in this budget from last year until we negotiate. All the teacher raises and things that they got last year were already built into this budget, into the salary schedule. So the only thing that's not in here now is what we're negotiating now for the new teacher salary increase and for any compression relief for some of the people that got squashed in the $15 thing, and or the performance pay, those kinds of things that we still have to negotiate with the union. Those will end up changing this budget at a later point, but right now we have to approve this budget, I keep calling it a budget, this salary schedule. We need to approve what we had last year with the 2 additions of the changes in the administrative salary and the $15 an hour in this until we get done with our negotiations. So we're asking you tonight to consider adopting this as the interim 22-23 salary schedule. Any questions?
So this is just until we negotiate with the union on the teachers and.
Right, we're in negotiations right now.
Right.
In fact, we met last week we met with them and we discussed, we began preliminary discussions. In the teacher salary increase, there's like about $180,000 that is not maintaining the increases that we've had in the past. That $180,000 is going to get split in between the new teachers and the tenured teachers at a 50-50 ratio. About a third of that $180,000 that now is in 2 pots at $90,000, about a third of it goes to the charter schools for their teachers. So it leaves us with about $70,000 for the new and newer teachers and $70,000 for the more tenured teachers in the other instructional people that don't fall in the classroom teacher category, but they're still instructional. So we're working through that process as to how those splits are going to happen and what that's going to actually mean to our beginning teacher salary this year. Because anything we move in between those 2 levels, whatever we give the grandfathered teachers on the bottom, we have to give the newer teachers 150% of that. So it kind of topples the scales all around. But that's what we're negotiating right now. And then we'll also be negotiating performance pay. So this will not end up being your final 22-23 salary schedule. This is just adopting the interim.
On page 2, instructional, in the blue there, 7.5, 7.508, are those hours?
Those are the hours during, that's
So
the hours of the day they
Our
work.
teachers are getting paid for 7.5 hours.
Most teachers are. There's a few teachers that are getting an 8-hour a day because they're doing additional duties. Like, I know there's at least 2 or 3 of them that are getting paid 8 hours a day versus the 7.5, and that was negotiated as well.
Okay, because that's been brought up before, why they're getting the 8 hours.
We can pull that information down for you.
I'd like to know, because other people, because 7.5 hours, I mean, some of them will spend 10 hours, they're not getting paid for it. The teachers spend way more than what they're actually paid for. We know that, because they're very dedicated people. But I'm wondering why some of them are getting paid more than the 7.5 hours. What are they doing that requires them to get more pay?
Part of the issue is the way that the Florida statute defines instruction. Mm-hmm. Instructional includes more than classroom teachers. And you can be a guidance counselor at a school. Mm-hmm. You can be a media specialist at a school. Mm-hmm. You can even be a teacher on special assignment, but be acting as an assistant principal. Mm-hmm. Those are the type of roles that get that extra half of an hour.
So we're not talking about classroom teachers
No.
then? So if you're a classroom teacher, it's 7.5 hours?
7.5 hours.
So 100% of the classroom teachers are getting paid 7.5?
To my knowledge, 100%. Now, if you have the tag of classroom teacher, and you are acting like an instructional specialist, a staffing specialist or something like that, then you could get 8 hours. But for the most part, if you are a typical traditional classroom teacher, you are going to get 7.5 hours by the contract.
It's been brought up. I mean, I'm not just, taking this out of the air. So I was just wondering if we actually look at each person and say, well, now what are they doing and what should they get paid and,
Most of that is in their job descriptions when we hire them, that tells them what they're going to be
Okay.
making for that type of position.
all right.
But if we're hiring a classroom teacher, their negotiated time is 7.5 hours.
7.5, okay, thank you.
Any other questions? Again, you've had a lot of information tonight. This is not meant to be confusing. If you have specific questions, we'd be glad to address them.
Okay, is there a motion to adopt the interim 2022-2023 salary schedule?
I'll make the motion to adopt the interim 2022-2023 salary schedule until negotiations are over.
It's been properly moved by Ms. Williamson. Is there a second?
Second.
Second by Ms. Bell. Any discussion? All those in favor, show a hand. 5-0, Ms. Bishop, for approval of the interim 2022-2023 salary schedule.
Thank you.
Okay, the next item is the school health service plan. That's presented by the health department for the district. We need to vote on that tonight because it needs to be, Ms. Joseph and I need to sign it if we approve it by September the 15th. It's due. And this is through the health department. It's the 2022 through 2024 school health service plan for the district. And it says how the school district and the Department of Health will lay out our school health services throughout the next couple of years. Are there any questions? Concerning the plan? Miss Annie Dyke presented it to, initially it was presented to Miss Joseph and I, and then we had it presented to the board. Are there any questions concerning the plan?
I don't have any.
Does anyone else? If not, is there a motion to approve the school health service plan?
I made the motion to approve the school health service plan for 2022 to
It's been-
2024.
It's been the school health service plan has been properly moved by Ms. Bell. Is there a second?
Second.
Second by Ms. Gibson. Is there any further discussion concerning it? Okay, if there is no further discussion, all those in favor of the 2022 through 2024 school health service plan, please show a hand in favor. 5-0, Ms. Bishop, for approval of the school health service plan for the 2022-2024 school year. Okay, that concludes our our school board meeting for tonight with these individual items of consideration. Is there a motion to adjourn the meeting?
I made the motion to adjourn.
It's been properly moved by Ms. Bell to adjourn the meeting. Is there a second?
Second.
Second by Ms. Gibson. All those in favor of adjournment, please show a hand. 5-0, Ms. Bishop, for adjournment.